So here we are on the 25th of September 2020. Evening 9 o'clock, our Friday's usual mentorship trading session. Good evening, everyone. Quite an eventful week. We had the expiry of the derivatives, sharp sell-off, and a bit of a healthy, decent bounce back also. Let's first talk about the index levels, a bit of look into the sectors, and then later, as always we do, we take up your doubts, questions. I welcome all our new mentorship traders who have joined us over the last week's time. Well, I have the Nifty futures daily and the 75-minute charts on my left hand side with multiple support zones drawn is the daily chart, and on the right hand side is the 75-minute time frame. Bottom down is just one indicator dropped a couple of times to mark some ranges. It's the relative strength index of 14 period. I had recently dropped in a message on social media. I guess I did that on TradingView and Twitter last night with all these levels because the market was selling off quite sharply. And in terms of important levels from where market did prove itself as levels of supports and resistances, 10,800, 900 was the first one, followed by 10,500, 600, and you can see them, the rest of them on my charts. These are primarily done on the premise of the levels which the index in the past have recorded a bit of zones of either support or resistance or both. For example, if you can see over here on my left hand side, I have marked 10,800, 900 primarily because we had a pretty good top here, which later on acted as a pretty good bottom, and that's why it makes this level important. Similar kind of observation you can see here. Similar kind of observation you can see here. These are typical signs of a nice bull market, highs becoming lows. And then if you bring your attention to my right hand side chart where I've drawn this horizontal line, typical sign of a bear market or a downtrend would be where lows may act as highs. When they do that, we know that we have a pretty decent confirmed trend in our hands. So what do we have? We have a sell-off. Let's quickly change my left-hand side chart to the weekly, and the levels are here. I can hide them. But what we have is a decent continuation of the first round of weakness that we saw 3 weeks back, which was this one. Japanese candlestick parlance, we can clearly see it's a bearish engulfing pattern, which is playing out pretty well. And we have a follow-through bar this week. The trend has turned down, and the million-dollar question would be, what do we have in store? Do we have a continuation of the fall going forward, or this is it? Now, the weekly charts do not give us much clarity on that if we compare that with the daily and the other time frames. The weekly had an exceptional rally up, and it's essentially slowing down. This slowdown is well observed from my daily charts, as you can see here. The first round of bounce back that we have found from the 10,800 mark is what we have in our hands today. It's a 2% move, which can be reflected here on the 75-minute time frame, which you can see here. Now, I will consider this bounce back with a little bit of pinch of salt or a little bit of doubt, not being very optimist right now that this move will lead to eventual rally. It may, but I would probably like to see a soft landing. By soft landing, I mean that prices should ideally find itself clearing a base. For example, let me draw an hypothesis. Say, for example, if it comes down and it hits the level a couple of times and then creates a base, that is, spends some time to make a base. It is just a expectation. It's not that markets per price have to behave like that. But going forward next week, important levels, 11,200, 220, 230, this zone that you can see here on my right hand side, this zone. If the index manages to take this out and sustains above this comfortably in this zone, then we are probably looking at a V-shaped recovery. But if it doesn't, if it just breaks up and just kind of finds itself slipping further down, then I feel that this fall that we had recently will have a little bit more legs to itself. Levels I have kept on my charts, it will stay there as long as it is needed or required. But going forward, 11,200, 300, or let's say 200, 250 zone is extremely important to keep in mind. On the downside, 10,800 from where we have this recent bounce back is going to act as the level. Breach of this level can bring in a little bit more selling. So we have 10,500, 600 in mind. I would say that bearish should be the underlying tone. Look to sell on a rise. If you are a intraday trader or a swing trader using the 75-minute charts or the 60-minute charts, you will get enough swing opportunity to go short. Do not be in a hurry to go long right now. If you do, they will be primarily contrarian in nature. Also note another thing, in this bounce back of Nifty, we don't have any divergence whatsoever. So that's why I'm probably considering this bounce back with a little bit of doubt in mind. View before I take you to the sectors should be bearish in nature, look to sell on a rise, and 11,200 to 50 is the range which will test the index. If the index fails to even reach there and slips, then definitely it's a clear sign that the index does not even have the strength to test its resistances, which means it's still a very, very weak market. Let's take a look at the sectors. I bring your attention to stock charts, which we generally do, and I'll go to the NSE sectors and take up the RRG to find out the weekly performances. I will change the comparison from SPX to Nifty and I'll update this. Let me bring this down to just 1 week and find out which sector did what. So it's all red across the board, the kind of weakness that we've seen. Major weakness coming in from media. I prefer not to talk about media much because that's primarily skewed by Z. Metals, PSU banks, real estate, auto, energy, commodities, pharma. So nothing was spared except a relative outperformance coming in from CNX IT, primarily the kind of move that we saw today, in fact, from stocks like TCS. So markets did not spare any of the sectors. It was kind of broad-based, across the board kind of selling. And last Friday, if you remember, in our weekly analysis, which I named Nifty vulnerable, it was primarily from the point of view of this channel that I had drawn with RSI. Channel border broken, retest of the channel border, and generally such retest can lead to sharp falls, and that's exactly what is there in our hand. And we spoke about the fact that the banks never performed. The banks had moved into the improving quadrant, this one, the improving quadrant where all the banks were. The financial service bank Nifty is still in the improving quadrant, but it's not finding relative strength, so it should break down, and that's exactly what has happened. Let us take a look at these sectors, how they have shaped up right now with some analysis of the sectoral charts. I have the three river system plotted on this chart, and just quickly take a look through them, scan through them visually, and try and figure out if there's any potential trade set up sectorally next week. Bank Nifty downtrend, definitely broken below the river, and it's hitting the banks. Sign of a strong downtrend. Oversold, of course, by no means. It's a weak sector. It did not perform when it was needed for the index. It will continue to stay weak. Do not look to buy financial services or banks right now. Short-term bounce back possible, but sell on a rise is a better option. Auto, relatively better off, has recently moved into a downtrend, has given a bounce back today with the IT. These are the two sectors which were leading from the front today. did hit outside the mainland. If you notice where I've kept my cursor, if I bring your attention to this point, this was one instance where it hit outside the mainland, the 3 standard deviation. So we're looking at quite an exceptional move here. A bounce back is very much on the cards, which is there. It will be interesting to see if it goes inside the river. But again, considering we have a confirmed downtrend, again, sell on a rally kind of a setup from CNX Auto also. Coming down to commodities, same story, like auto, sell on a rise. Consumer durables has broken down quite a bit. The expansion of the Bollinger Bands is very, very relevant. So that's also trying to revert back to its mean. The fact that most of the sectors have hit its 3 standard deviation is a sign of an exceptional move. Number one, which means a strong downtrend. Number two, which means that because it has hit exceptionally on the downside with 3 standard deviation, a bounce back or reverting to mean is a very obvious expectation, and that's exactly what we have. Do not go bullish does not mean you go bullish. It means that you should be careful on this rise. Energy, same state of affairs. Nothing exceptional as of now that we have found in the sectors. Financial services, just like the bank Nifty, could not perform, just broke down from this range and still in a very much a well-defined downtrend. Once a stock or an index defines a trend, it's far more easier to continue than to reverse. FMCG hits the 3 standard deviation mainland and now managing to bounce back. So I think that what we have on our hands right now is probably a market which was deeply oversold recently, and strong sell-off will lead to a little bit of corrective mode, which will mean prices can move up. But positional traders, I think, should continue with a bearish stance. It's the Nifty IT which is on the other side of the river. And if you can see here, what has happened is just the opposite. The IT had hit the mainland, the banks 3-4 days back, which has led to a reverting to mean, the prices coming inside the river. That's exactly on the opposite side what is likely to happen with the other sectors we discussed above. They can inch back a little bit within the river just to sell off further down, possible. This is media. Metals now. Look at metals. Metals moved into a downtrend here in this zone, gave a short-term bounce back, stayed within a range, couldn't found much strength, and then sold off significantly. That's exactly the sign of a continuation of a downtrend, and that's exactly what can follow suit later if the index fails to sustain above 11,200 to 50. Pharmaceutical is again better off. It's on the other side of the river, so it's IT and pharma which are holding well in terms of the underlying trend. See, this is exactly what I was telling you 5-7 days, 6 days back. Nifty Pharma hits the mainland, the three standard deviation, which means an exceptional move, which means a reversion to mean is likely. That's exactly what we have. Now, trend traders are buying on a dip. Now is very likely pharma will bounce further up from here if the trend has to continue. That's exactly what on the reverse mode I'm expecting for most of the sectors like auto, metals, and commodities and energy. PSU banks, deep oversold and downtrend. Real estate, volatile. Uptrend, slipping back to down, up, down, so it's not going anywhere, but still weak. Small caps. Now, these two sectors, the small and mid cap, had a great run. And after the great run, now they have just moved into a downtrend. It's just exited the river on the downside. It's given a bounce back. I think the small cap will try and create a range for itself somewhere here. It's going to oscillate for some time before it finds its directional clarity. Mid cap, on the other hand, is weaker than the small cap. It is in a well-defined downtrend. And there you go. Private banks, similar to Bank Nifty, is very much in a downtrend. So what we make out of these sectors is that most of them has moved into a downtrend. Most of them have moved into a downtrend and extended themselves quite a bit to hit the 2 standard and the 3 standard deviations, which mean that they can give us a bounce back, and that bounce back can be a selling opportunity going forward. That time will tell us, that price will help us to decide. These are the sectors. Back to the RRG charts, where we find that PSU banks, Bank Nifty, real estate, financial services, and private bank are all in the improving quadrant. With the exception of real estate, if you notice the tail, it's actually gaining strength. So within the improving quadrant, where all of them are losing momentum because they're falling, it's the real estate which is rising. So we'll keep an eye on this next week, because if it is rising, does it mean it's trying to go to the leading quadrant? That's generally the flow, eventually the flow, not immediately. If that is the case, then from this improving quadrant, stocks, real estate can stand out. If that's the case, why shouldn't we not take a look at the real estate stocks? Rather than the RRG charts, I'll rather take a look at, okay, so I need to make some changes over here. If you just stay with me for a couple of seconds. Yes, there you go. So I have primarily DLF. I can just, okay, done. So I'll go to the dashboard. I think this worked for us, 10 per page. And now if I go to real estate, yes. So DLF, flat, just moved into a downtrend, but it's flat. Very important stock. And Godrej Properties, these are the only stocks which I track because they're there in the futures. I don't track the others, but DLF definitely is one you would like to keep on your radar. Let's go to the NSE sectors. Let's go to RRG. So amongst the improving, we are noting out the real estate sector, and within the real estate, we are noting out DLF. Now, amongst the ones which are leading, we have small cap, we have IT, we have auto, we have metal, we have media, we have mid caps, and we have commodities, out of which, of course, the mid and small caps are still exceptionally strong. No doubt about it. The IT has proven itself over and over again. I think that they will continue to. Surprising to see that the pharma is not there. In fact, pharma is down here in the weakening quadrant, which is improving momentum. Now, if you go by the observation, we know that pharma and IT are the pockets of strength right now, out of which IT is in the leading and pharma is in the weakening, which means that if we are going long on pharma and IT is where we should have a little bit more faith. We should look to buy more confidently IT on a dip rather than pharma. So long trades within pharma should be short-lived, and in IT it can be a little more longer. FMCG, clear RRG flow has gone from weakening to lagging, and so is the case with consumer. This is your ITC, your Hindustan Unilevers, and etc. So sectorally, we don't get any a clue, but apart from that, real estate is something we'll keep an eye on, number one. IT and pharma definitely are the other tools, out of which IT stays out. And before I close this analysis, I'm going to quickly take a look at the IT stocks and find out. Infosys and TCS are the one I was looking at because they gave quite a deep correction. HCL Tech, decent move we got today. In fact, most of the move came today itself. Uptrend, goes inside the river, bounce back. That is what you will find in most of the charts. Mindtree, very good from a positional perspective. TCS was the one which gave the deepest correction. And for TCS, this level of close to 2290, 2300 is of extreme importance, from not only from a short term but medium to long term perspective. Tech Mahindra is also one stock. I think Tech Mahindra, Wipro, and TCS also can be looked up at next week for some perspective for the bounce back. So let's sum this up. Nifty gives a short term bounce back from expected supports, but there's not much merit to believe that this is it. Levels should be watched going forward. 11,200, 11,250 is a very immediate zone to keep a close watch on. The index needs to sustain above this for further upsides. Most of the sectors are moved into a downtrend. Most of these sectors have sold off sharply, and that's why a bounce back is right. That's exactly what we have seen today. We can see an extension of that, but we are not going to go aggressively long or bullish. In fact, we will be on the lookout to sell on our rights unless proven wrong by the benchmark Nifty. All right, so that's our take on the index and the sectors. Now we move ahead and we talk about your questions, your doubts, and the trades. So let's begin.